it's certainly been a challenging period this year, to say the least. So from a portfolio perspective, what we've been thinking about is how best really to insulate the trust and the holdings from the worst of the headwinds that we're seeing buffet the world and Asia as well. So really the focus has been on doubling down on quality. This is a long-term quality approach and process that we apply when investing across the region, and that continues to very much be the case. We think these are the companies that will weather the turbulence better, given their strong market positions, their healthy cash generation, their strong balance sheets, and an ability often to pass through inflationary cost pressures through higher pricing. So that's been a big focus for us. We've also continued to see this so-called growth to value rotation in response to rising rates. And we didn't have a lot of growth stocks in the portfolio, but where we did, we've tidied those up and exited a number of those more growthier stocks in favor of slightly more defensive stocks, again with the strong balance sheets and the stable cash generation. So that's been another key change. And then just trying to sort of align ourselves with some of the macro changes that we're seeing. So obviously we're seeing rates rise. Well, in Asia, a number of the banking stocks and companies will be beneficiaries of rising rates. Their net interest margins are expanding as rates increase. So we've just added a bit into the banking holdings. Similarly, we're continuing to see reasonable growth in India and across Southeast Asia, partly in response to those countries opening up relatively late post-pandemic. So there's a nice sort of tailwind there. So we've just been adding a bit to those markets as well. So hopefully that gives you a sense for what we've been doing. So performance year to date has been quite challenging, reflecting the broader market turbulence. So the trust to the end of September is down approximately 10% in absolute terms, which is disappointing. Obviously, we'd rather see positive returns, but it has been a challenging year, and that performance more or less mirrors what we've seen in the broader market. If we think about areas that have been particularly challenging for the portfolio, we had quite a large exposure to the tech hardware sector in Asia, so sort of semiconductor companies, which are super high quality businesses and market leaders globally in their fields, but nonetheless, this is a cyclical sector that is exposed to that sort of rising global recession risk. So whilst we've pulled back the exposure to that sector, it's nonetheless hurt performance a little bit over the course of this year. I said earlier that we've been reducing some of the more growthy sort of stocks in the portfolio, but one or two of those have hurt performance earlier on. In contrast, we have found good performance coming through from increasing the exposure to the banking stocks that I mentioned. So we have seen that interest rate story play out favorably for them. And also more generally, I would say the trust's exposure to Southeast Asia, which is quite sizable, has helped, with Southeast Asia being a bit more resilient this year. In contrast, we have a relatively lightweight to China, and given how challenging it's been for China this year, that has supported relative performance of the trust as well. The first holding I would highlight is a company called Bank Central Asia, or BCA as it's better known, which is Indonesia's largest private sector bank. It's a top 10 holding in the trust, so a core position, and one that's been core for many years now, and we think is the sort of essence of a long-term compounder. The Indonesian banking market is dominated by the state-owned banks, but we think BCA as a private sector lender is a much higher quality operation, and that's evidenced by the huge advantage they have in terms of funding base. They have an extremely large, sticky deposit base. which has earned them the title of Indonesia's transaction bank. And this means that they have the lowest cost of funds out of any bank in the sector, which helps them to price loans very competitively and to target the highest quality customers as well. And that translates into better returns for the bank. So they have the highest return on assets in the sector. And that's not been at the expense either of bad loans or non-performing loans, as they're called. So if you look at that measure or metric over the years, they've managed that extremely well. It also has an extremely strong balance sheet. It's very well capitalized and a good management team, and is really proven to be a long-term compounder over the years, has proven to be defensive through the cycles, and is a play on the continued growth in the Indonesian economy, which is one of the largest economies and markets in Asia. So we think it has many good years ahead of it. The second holding I would highlight to you would be Budweiser Asia Pacific. It's not a top 10 holding in the trust, but it's probably a top 15 holding, and I consider it a core holding. It is the subsidiary of the global beer business Anheuser-Busch InBev. And this is their Asia Pacific subsidiary. It's listed in Hong Kong, but its core business is in China, where they are the market leader in the premium beer segment. And the premium beer segment is the most profitable segment in the industry, has the highest margins, and Budweiser have about 50% market share in that sector. So an extremely strong position that allows them to generate very attractive margins, really strong cash flows, and now positions them also to grow and follow the trend into super premium beer, which is growing very rapidly in China as the middle class continue to aspire for the latest and best and newest brand. And they have an extremely strong portfolio of brands able to draw on their multinational parents. So it's not just Budweiser, they have Corona, they have Hoegaarden, for example. In addition to China, they've got a strong position in South Korea, both in the sort of mass beer segment and the premium and super premium beer segment. So that's an additional leg of growth for them. So it's a nicely positioned business across the region. They have growing businesses in Southeast Asia and India as well. Very strong balance sheet, great cash generation, good management team, and unusually they are one of the forefront really of the ESG trend as well. So MSCI ESG, which is a third-party ratings agency, has upgraded Budweiser Asia Pacific's ESG rating 3 times now over the last 3 years since they've listed, for all the good work that they've been doing in that space. So that's an important quality criteria for us as well when we think about our investments, and Budweiser is one of the pioneers and leaders in that respect too. So it's, as I've said, pretty challenging times for the globe and for the region at the moment. I do think that Asia is better positioned and more resilient than much of the West. Certainly we're seeing growth still come through here, so the risk of recession seems relatively low for Asia. Inflation is a little more benign here. So I think overall fundamentals are in better shape, but nonetheless it's clearly a challenging period. So I think it's important to look through some of that and focus on core underlying structural growth themes. And that's how we've continued to position the portfolio this year and into the future. Those themes include the aspirational consumer. So, Budweiser Asia Pacific is a great example of that. So a play on the rising wealth of the Chinese middle class, but it would be equally applicable to companies that we hold in India or Southeast Asia and other faster growing emerging markets within the region. So that's a long-term trend, and we have various stocks that are a play on that theme. We continue to like the technology theme, both from a tech hardware standpoint. Yes, there are those recessionary concerns, growth concerns, and cyclicality concerns, and we're sort of reducing the position accordingly, but we continue to like it thematically over the medium term. Asia is home to some of the global leaders in the semiconductor industry that will continue to benefit from the rise of cloud computing, data centers, electrification of the auto sector, and demand for chips across all sorts of different facets of the global economy. So we continue to have that theme. More broadly on the sort of technology theme, digitalization is well represented in the portfolio, whether that's directly through internet stocks, but also through more traditional companies that have implemented or are implementing quite exciting digital initiatives and introducing more technology into their businesses. So that's an important theme too. And the other two I would just highlight would be healthcare. It's a little like the aspiring consumer in that it's a play on the rising wealth levels and emerging middle class across Asia. So as those wealth levels rise, demand for healthcare services and products increases, and that drives growth for many of the companies, and the trust has several in its portfolio that are a play on that theme. And climate change, and more broadly ESG and going green, I think is an important thematic still. China has for a long time been leading the world in terms of the adoption of renewable energy, certainly in absolute terms and scale terms. We're seeing India now follow suit and announce extremely large solar, in particular solar projects, and setting targets to increase the renewable energy component within the overall national energy mix. So that's a key thematic too within the New Dawn Trust.